First and foremost, why were you concerned, or were you concerned about the closeness, shall we say, of Alameda and indeed of what was happening at FTX?
So I was concerned about a lot of things over the last 2 years in this space, right? So I think there's a couple of really big fundamental issues here. One is just a lack of corporate governance, right? So FTX basically had no outside investors on their board. Many of these other companies that blew up this year had similar setups where, because they had so much leverage when they were raising money, there was nobody who could tell them what to do, right? Then there's a lot of leverage, right? You don't see blowups like this without a tremendous amount of leverage, right? That's going to typically be there in every situation. And then the last piece is just this overreach for yield in a low interest rate environment, right? So all of these firms are essentially doing these sort of poorly structured arbitrage trades. And so if you look back to the spring of 2021, the grayscale arbitrage trade, who was in that trade? 3AC, Celsius, BlockFi, right? When you look at Terra Luna, that was also an arbitrage trade. Borrow money from a trading desk at 10% to get 20% in Anchor. Who was in that trade? Again, 3AC, Celsius, and of course FTX. And so FTX blows up, and indirectly, it's because of the relationship with Alameda, right? Because Alameda essentially lost so much money in that Anchor trade that they needed to paper over it. And that's where Sam crossed that bright line, right? Because up until that point, it was just gambling with the principal's money, in a sense. Yeah. But once he started gambling with the actual users' money at FTX, I think that's when things really went downhill.
5 million users, but also a proliferation of high-profile celebrities, of thought of and deep-pocketed venture capitalists, and now been burnt and I'm sure incredibly angry at. Mike, what next in terms of credibility? Because as you've just been mentioning, the names, you've had Luna, Voyager, Celsius, you then have FTX. Is there another shoe to drop here? Is there a contagion risk? Is there other people that will be so badly burnt that there has to be further to fall?
So eventually there won't be any contagion risk, but obviously those of us who felt the contagion was mostly contained in June after Celsius were wrong. Remember at that time, SBF went on your program and a number of others and said, look, this is over, right? There's not going to be any more downside. And in retrospect, he was clearly doing that to protect his own firm's liquidation levels. He wasn't doing it because he actually believed it. He wasn't doing it to be JP Morgan. He wasn't trying to save everybody. He literally was just protecting his own ass. And I get why he was doing that now, but I should have read kind of deeper into it and realized, okay, he probably has the same problems in his balance sheet. So roll forward to today, who could actually have more risk in their balance sheet than we know of? The one firm I can think of is Binance. And that's not a popular opinion. There are a lot of people who want to believe that Binance is a good actor, but the reality is they're an offshore exchange that's thinly regulated, just like FTX. They don't even have a domicile, so it's hard to hold them accountable for anything. And I'm sure and I'm certain that in some ways they're engaging in similar activities on the back end. So that would be the ultimate blow up if something would happen to Binance.
Well, of course, we'll go to Binance to try and get their take and have them be able to defend themselves, CZ in particular. But there is an interesting take there that this is the centralization of ultimately what is wanting to be decentralized. Is there a way that you can have centralization other than perhaps a company that is public, that is regulated? How do you regulate non-public, non-US domiciled companies? Is there a way we can bring transparency, the promise of real transparency that so excited many about this space? Can we ensure that that is happening when you do have these deep pockets and indeed a level of hiding behind certain arbitrages?
I mean, I think there's sort of two ways. One is to just stick with a very safe, regulated onshore exchange that holds all the assets one-to-one, doesn't lend them out, doesn't run a hedge fund in the background like FTX or Celsius, or go all the way to the other side into true decentralization and leverage DeFi protocols that are using code to offer these services, right? So Uniswap and Maker and Compound, I think it needs to be noted that when you look back at what happened during the period where Celsius was being liquidated, those protocols did a good job, right? They liquidated the counterparties immediately, no questions asked. They didn't care who you were. They didn't do any credit check. They didn't call you and say, please, sir, deposit more collateral. They just did the job that was written into the protocol. And so I think truly decentralized DeFi could work at scale and may actually be better in most cases to a centralized option. But if in the meantime, while we're waiting for that to happen, using a company like Coinbase in the US is one of the safest ways to approach it.
Let's talk a little bit about what regulation happens from now, Mike, because I'm pretty sure there's a lot of sharpening of pencils going on at the moment, because in many ways, Sam Bankman-Fried himself was seen as the main lobbyist out there talking, and maybe have been his undoing in many ways when it comes to the relationship that disintegrated between himself and CZ because of that lobbying. But I'm interested when, actually, in the clear light of day, in real TradFi, traditional finance, you still get these blow-ups. You still have Archegos, you still have Bill Hwang, you still have, goodness, a liquidity issue that happened just a month or so ago in the UK with its pension funds because of issues within the holdings of bonds and the movement. You know, even in deeply regulated markets, we can sometimes have these desperate affairs. How do we make regulation fit for purpose within crypto at the moment?
So it's a tough question. But if you look at like MF Global, right? You know, they went into bankruptcy and it took a little bit of time, but none of the sort of users of that platform lost any money. Same thing with other brokerage platforms, other banks. The regulation is so stringent and there's so many protections that it's really hard for an end customer to lose all their money. And so, look, I mean, that sort of regulation may stifle some innovation, but it also stops casual retail users from losing everything. And so I would err on the side of being more conservative generally. I don't think it makes sense to allow people to lever up 10x, 20x, 30x. I don't think it makes sense for these platforms to take the money on the back end and essentially gamble with it. And so if that means less innovation, I'm sort of okay with that.
And interestingly, of course, the innovation, the froth, the money that poured in has sort of been pulled out. And it's almost a year exactly since Bitcoin was at 69,000 and then since to today when FTX is unraveling. Can you call a bottom in this market? What do we need to instill some sort of trust back to in the relative space of other cryptocurrencies out there?
I think the most important thing, once again, is that there's not going to be any taxpayer-funded government bailouts here. And I think that will give people confidence once it's clear that there's no more dominoes left to fall. And I think in the coming days and weeks, as we look at the creditors to FTX, which they're just going to be numerous, companies like BlockFi, et cetera, that BlockFi is probably going to file for bankruptcy imminently here. I've heard they've already hired counsel today, which makes sense. I sort of said that on Twitter 2 days ago, that you should pull your money off BlockFi because that was sort of an inevitable consequence of this. Look, it's going to take a little bit of time, but sometime in Q1, Q2 of this coming year, there's going to be a wonderful, potentially generational opportunity to buy Bitcoin. And when I say just buy Bitcoin, I mean Bitcoin in cold storage where there's no counterparty, where there's no risk that you lose all your Bitcoin, because Bitcoin's a wonderful thing on its own. It's what we're talking about is all the adjacent centralized businesses that took on too much leverage, that were often unregulated and they were offshore and they messed up. And that happens in these sort of Wild West environments. But Bitcoin itself is still going to make a new block every 10 minutes for the next 100, 200, 500 years. That's what we're betting on in the Bitcoin space. And if that comes true, it doesn't matter what happens to any of these companies.